been interesting. The last kind of nearer term period, the rally back has been fascinating as well. I've read a number of pieces over the last 24, 48 hours that talks about this being a healthy correction, i.e. we're seeing maybe overvalued tech stocks coming down, the rest of the market doing okay. I think the argument around that at the moment is still yet to be proven.
A little Scott Bessent.
Yeah, I was going to say, is that yesterday's conversation around Scott Bessent coming back? Yeah.
So I think it's going to be interesting to see how the rest of the week progresses. Yeah. Clearly, yesterday was a light volume session. We are waiting for the Fed, and I think that probably is the key moment this week.
And retail sales, we built that up quite a lot, didn't we? Got excited last week about the prospect of retail sales, and yet in the end there was something in it for everybody. With the disappointment initially, and then the control group, that sort of smaller data set seeming to please some.
There's no real clarity on where the American consumer lies. So on the one hand, they're expecting inflation expectations at a 22-year high. On the other hand, they're still spending, and yet there's still some stimulus and liquidity. It's a little messy, not just on the geopolitical front, but on the consumer front as well.
Yeah, it's noisy, it's difficult to read, it's uncertain, hard to invest in. Difficult markets, interesting markets. Talking of which, we are going to have some great discussions around what is happening in these markets and these economies. Amanda Blanc, Aviva CEO, is going to be joining Francine Lacqua very shortly. Chris Rhodes, the ICE Futures Europe president, is going to be joining us around the table. Valerie Noel, Seas Group head of trading, to talk us through the markets. All of those guests coming up.
Yeah, we'll also be speaking to we'll be talking to the BBVA CEO. Ona Gench will be with us. A lot to talk about when it comes to the global macro environment, but also M&A, of course, within the banking sector and in Spain specifically. We'll also talk to Mère-Anne Barbat-Leani, who's the chair of the French Markets Authority, the AMF. That conversation around the regulation of markets, the Capital Markets Union, as it used to be called, now the Savings and Investment Union, apparently. We'll get into that conversation.
Love a rebranding. Of course, we have the perfect lineup to talk about. Of course, the main topic that is today, and that is Germany. At 10 a.m. Germany, 10 a.m. UK time, sorry, we get that Germany ZEW or ZEW, if you prefer, the survey expectations. We'll see if the market reacts to that latest data set. But then, of course, the highlight of today in the European session is that vote on the debt brake. So we're going to keep an eye and, of course, bring you the headlines as we get them right here on Bloomberg TV. In the afternoon, though, the focus switches over to the U.S. We've just been talking about the economic data from the retail sales to the inflation expectations. This afternoon, we get housing starts, import price index, and industrial production numbers as well. But then again, I think the highlight, perhaps for tomorrow for us, is going to be Jensen Huang's keynote speech. We're talking about a rebound in these markets. How much of that can we expect to really show up in NVIDIA specifically?
Does big tech need this to happen now? Do we need a positive speech to get these stocks back on track? They've come down a little bit. Some would argue they're still trading at incredibly lofty valuations. What can he say? He's usually so optimistic. He's usually so positive. So many great things to say. Are those comments gonna land, or is there more skepticism this time around?
Yes, in a world that knows about DeepSeek and knows about other Chinese competition.
Yeah, Manus.
The bar, Manus, yes, which the bar is not quite. The bar is not where it used to be, I suppose, for the likes of NVIDIA to impress. But we'll be looking for any news on their new processor, or the one still to come, Rubin. We'll be looking out for information on sovereigns and how much they're planning to spend on AI. So there could be a lot in the mix today.
Is it still coming down to the hyperscalers? Is it still coming down maybe to the shipping delays? Blackwell was exciting, but it's just now got shipped out. Rubin is exciting. We're still looking at delays a year, 2 years down the road.
Absolutely, and there's all kinds of other issues still going on around this. What happens with energy? What happens with gas, particularly in the United States? All kinds of energy aspects to this story that we need to focus on as well. Anna was mentioning it just a moment ago. Let's talk about some of the other stories we need to focus on this morning. Israel has launched a wave of airstrikes across the Gaza Strip in response to what Prime Minister Benjamin Netanyahu says is Hamas's refusal to release Israeli hostages. Gaza health officials say at least 235 Palestinians have been killed. Many more have been wounded.
Okay, can you hear me?
Says it was consulted ahead of the attacks. Bloomberg has learned that Chinese authorities are looking into Newcastle's plans to sell the bulk of his company's global ports operations to a consortium led by BlackRock. The deal, worth approximately $19 billion, has drawn criticism from Chinese officials and politicians who accuse the firm of groveling to US pressure. President Donald Trump had touted the deal as the US reclaiming the Panama Canal. And shares in BYD have jumped to a record high. This after the Chinese automaker unveiled a new lineup of electric vehicles supported by an ultra-fast charging system. Now, according to BYD, the new battery system can provide around 400 kilometers
my sound As
with
in my
just
voice.
a 5-minute
Can you hear
charge.
my
Now, the company
voice?
is expected to start selling the vehicles with new tech.
Can you hear my voice or you can't hear my voice?
Next month. So we're getting close to the kind of time that it takes to pull in to a petrol station,
عم
gas
بحكي.
station, and refill.
هلا,
You
can you
don't
hear my
quite get
voice?
the same range as you would if you did that
Or you
with
can't
a
hear my
petrol car
voice.
or a diesel car. But you're starting to get close.
Yeah, I mean, I'm sure I could take longer than 5 minutes. So, you know, maybe,
Yeah.
maybe they don't need to pursue any quicker charging, any more ultra-fast charging we've wasted on me. I mean, is this the end of all of
Range,
those
yeah.
anxieties? Because there was range anxiety.
Can you hear my voice?
Rage.
Can you? Are you?
Rat rage. And then the rage that you feel
Yeah.
if you show up at a charger and it's broken, for example. I mean, if it's only 5 minutes, none of these things matter as much as they.
But
really
you
do.
still got to have the number of chargers,
You do.
and that's the issue.
And they have to not be broken.
And they have to not be broken.
I think we should put this into some context here because I had to do some digging. I didn't actually know what this meant. I've never driven an EV, I have to admit. I certainly never driven a BYD either. But the kilometer per minute charging, according to our reporting, is about 80. So 80 kilometers per minute charging. By comparison, you look at Tesla, the main competitor, of course, is 18 kilometers per minute charging. This isn't even a speed by a small margin. This
Yeah.
is a massive
Huge.
Yeah.
beat.
And better than Mercedes, which is the best European one in our
Yep.
research, in our little bit of digging on how they compare.
Can we just talk about speeds? Because
Hi,
this comes
guys.
Really quickly. as well.
Weirdly, I don't know
they
why
go
you can't hear
100
me.
They go to 0 to 100 kilometers an hour
Test,
in 2
test.
seconds.
Yeah.
Okay. So this is Ferrari speed.
Unless
So-
you're driving in Germany, this is.
Can you hear me, guys, or not?
Well, no. Acceleration is still important.
sure, that helps.
So
You can just hear the TV.
Context. The crucial guy, Johnson.
But it does kind of it levels the playing field, which I think is fascinating. Why do you need a hypercar? So a Bugatti Tourbillon, which is this kind of multi-million-pound hypercar, does 0 to 100 in 2 seconds. The BYD, you can be driving around one of these. I went in one the other day in Dubai as a taxi.
I hope it didn't go
2
that
seconds
fast.
is what. Fortunately, it didn't go quite that fast. But it's going to be interesting that speed is no longer the metric.
Yes.
Okay, cool.
The kind of the supercar makers are going to be able to rely on because everybody's going to be able to do it.
Taking us back to where we started, will the
You don't want
grids
to talk more about this?
will the grids be able to cope? Was what another
Yeah.
line that stood out to me in our story because
Exactly.
it'll be limited to certain bits of China.
Okay, let me see if I can share my screen.
Well, it's also a tone shift on EVs. Hasn't the narrative around EVs simply been that this is no longer in fashion, this is no longer in vogue?
Yeah.
And now could this bring another wave of money from specifically, of course, Asian investors, but around the world as well?
Okay, let's focus on what's coming up during the programme. The UK Chancellor Rachel Reeves defends her fiscal rules and pledges to bring down government borrowing. More from Lizzie's interview later in the programme. Plus, Santander Executive Chair Anna Botín tells Bloomberg that Europe is awakening thanks to President Trump. We'll bring you that conversation in the next hour. Up next, we'll be joined by Robert Dishner, Senior Portfolio Manager for Multi-Sector Fixed Income at Neuberger Berman. If you want to get involved in any of these conversations, IB plus BBTV Go is the function to use on your Bloomberg terminal. Yet another lovely sunrise. I feel we've been spoiled these last few weeks here in London. This is Bloomberg.
Okay, let's clean up. Okay, so we can put this here. Cool. Guys, I'm trying a new software streaming service. And it seems pretty cool. Seems pretty cool, guys. Let's see if we are live or we are not live.
David Weston. Join me
Let's see
for
if
the
you can
next
see my
generation of
screen.
Wall Street Week, telling stories of capitalism.
Guys, I need your help.
Markets,
What can you see something or not?
For a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
I can see it.
Grow immensely.
I can see it.
That's
Wait,
an
wait.
extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what
Okay,
you need
if
to
we put it
know,
this
it's what you
way.
need to think about.
Put it this way.
Bloomberg loves earnings.
Okay, we're gonna bear with me.
Can't wait.
Okay.
It's like opening presents in a
Ta-da! Can you see my screen, guys?
like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the
So what can you see right now? Let's test it out. What can you
New
see?
York and San Francisco. Our expert hosts have the
Just
data
me?
analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated
You cannot see anything
in the
else.
middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Trading view screen, yes. So much just me. Play trade. Okay.
Technology is driving business across
Trading.
Europe.
in Asia are betting on tech.
Okay, cool. Cool. Now we can share that.
Jumpstart your trading
Cool.
day on Bloomberg Open Interest.
Okay, cool. Cool. Well, welcome the three of you.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Cool, guys.
With the players,
Where is this? Where is this?
They're not buying what the industry sells. Join us on Bloomberg Open Interest every trading day. only on Bloomberg.
Finally, I can have my stream. So guys, you can come and go. I'm gonna keep this open a bit for working purposes. I'm gonna be working on the side and sharing with you a few things.
Awakening, and the alarm clock has been President
Oh,
Trump.
so if I share
Because
this,
what I have never seen is the
okay, I
president
need
of the commission
probably I probably need another
that
screen.
we're in extraordinary times and we need to take extraordinary measures.
I think I need
So,
another
It's not
screen to
just
share
good
with
for
you
the
this
US, it's good for
one,
Europe.
and then
What's
have.
happening is good
I do
for
have
growth.
like another screen that I removed.
Making Europe great again. Anna Boatin,
Making
Executive
Europe
Chair,
great
Bank of
again.
Santander, speaking
Making
with
Europe great
David
again.
Western for
Let's
Wall
check
Street.
for
We
now.
take us
Let's check
nicely on
gold.
to what is going to happen today. Two key conversations: one around Ukraine,
Dun, dun,
one
dun,
around
dun,
German
dun.
spending.
Where is
The
gold?
German
Where is
Bundestag,
gold?
of course, is getting
Where
ready
is
to vote
gold?
on a bill later today
Look at
that could
this,
unlock
look at this. We're
hundreds
flying
of
on
billions
gold,
of euros
guys.
in defence and infrastructure spending.
Flying
What
on
does it mean for
gold.
the markets? Valerie's here to tell us.
Look at
Guy,
this.
it's high stakes for this vote later this afternoon. Let's just take stock of how markets have digested this recent announcement from Germany for this infrastructure spending. Just in the month of March alone,
Crazy.
the euro has rallied over 5%, nearly 5.5%, Guy. Its best month in over 3 years. And on the flip side, German bonds, those yields are rising. A 40 basis point rise in the German 10-year yield as we price in this extra debt issuance from Germany. Also, defense stocks, we got to keep talking about those. That rally is extending in defense stocks. Barclays saying they want to be buying on any dips. We flip on, we can just check on how they're moving year to date, because Rheinmetall, some of these stocks up over 100% year to date, and many are still calling for further gains to this sector. Maybe on this vote this afternoon could be the catalyst for further gains. But defense, this rally in defense is boosting other sectors across Europe. Talk about construction, talk about other industrials as well. Flip on, we can just talk about German mid-caps.
Did you see this move, guys, here?
Out from Deutsche Bank saying that they want to move into German mid-cap, saying that once this vote, once this hurdle is over with, they are still wanting to go for more growth when it comes to those German names, especially when it comes to mid-caps. That's the MDAX index here in yellow.
Great stuff. Thank you very much indeed. Perfect setup. So two key events today. Two things that the market has been worried about. What is happening in Ukraine and also these key German votes. Let's talk to Robert Dishner from Neuberger Berman about what happens next. Senior Portfolio Manager, Multi-Sector Fixed Income and Head of Trading here in London. Is today today mark the passing of peak uncertainty? We've been in enormous uncertainty for weeks. Is today the day when that starts to recede?
Yeah, we sort of think that this is when maybe it can start, right? We have the German vote, which you alluded to. We have the Fed tomorrow. We have the Bank of England, Bank of Japan this week, and then obviously the tariffs in a couple of weeks. So the market's going to get a lot of answers to its clues. If you think Jerome Powell kicked off some of this uncertainty a week or so ago when he talked about potentially increasing growth forecasts, will we actually get that Wednesday? So today's the first stop, or really in the last week, but is today the first stop in climbing down a little bit from that wall of uncertainty?
If we've passed peak uncertainty, or what happens over the next few days, do we take more risk? Does the market take more risk once that moment has been cleared?
It's certainly possible, because you look at things we were talking about earlier. The VIX was greater than the first dated future. That was extending. So the market was telling you there's just a lot of current uncertainty in the market. And so could the market rally after that? Yes, absolutely.
Don't worry about that.
Yeah, you can take it out.
It's fine.
We're all here, so you don't need it anyway. Well, good to see you. What about the Fed and its role in this uncertainty then? Because you nodded to a little bit of it there, but the Fed is dealing with a whole range of uncertainties, just like the rest of us, and a kind of much more price-taking than they've been in recent years, perhaps, with having to take big policy shifts from the White House.
Yeah, no, absolutely. But, it's their job and it's our job, right? And so, they're going to have to calibrate the economy for that. Is this lower growth, or is it stable growth, or increased growth, which Powell had been talking about a couple of weeks ago? Is it stable inflation or potentially higher inflation? And how do they react to those type of environments? So, from our perspective, this is what they're meant to do, and the market is looking for this. This is going to be a big meeting, right? Because we get the projections. And so how is the Fed sort of thinking about these policies in terms of their outlook?
So is this the first Fed meeting where they can't hide behind, we have to wait for policy? Is this because we haven't got much backward-looking data for them to go on that reflects the new regime?
Right.
But because we get the projections, does that mean for the first time we really get to see what they think these policies will do?
That's exactly right. And if you think about the December projections, some people had it, some people didn't. So now we're going to get the full committee in terms of what they think about what all these policies mean.
Robert, can you give us a range here on the bond market? We'll start with the U.S. just to continue the flow of the conversation. Looking at a 430 on the 10-year. In 48 hours' time, what kind of range are we looking at?
That's a great question. It's been really stuck in a fairly narrow range. The volatility's been in other markets. That's been Germany, that's been Japan, that's been China. That no one's really talking about that rise in Japanese yields or the Chinese yields year to date. But the U.S. market's probably a bit more range bound in terms of yields. So is that a 425 to 450, a 430 to 450 type range? And so
guys, who's trading gold?
Not where unless
anyone trading gold?
Announcement regarding or something big in terms of growth. The U.S. market's probably a bit more range bound because there's equal pushes and pulls with some lower growth and potentially some higher inflation. But again, those are sort of netting against each other to create really the opportunities a little bit in rates markets. There's been bigger moves elsewhere.
Let's talk about the range then on the German bond market. We'll get 281 on those yields right now. Next 24 hours, give us a range.
Well, that's a great question. I mean, look, we rallied 8-10 basis points yesterday on fears of constitutional court. So the volatility is really in that market. And could Boons hit 3% in the short term? Maybe, maybe not. But really, what's the long-term rate for Europe? There's a lot of implementation risk. First of all, there's the risk of getting the deal done. Then there's the implementation risk into it, and then there's, as we talked about earlier, the possible.
The thing is, I'm trying.
Which could lower gas prices.
I'm trying to.
So you're looking at probably a bigger
I'm not sure if you guys heard of the BYD news.
Or 2 weeks ago, the 40 bips rise.
Of the BYD news, they released a car basically that can recharge, and we're breaking. Okay, we're breaking support right now on gold.
Huge diversity of views. Right. Some people calling.
See that support line?
Some people calling for 250. So. It's a difficult situation for the market to attack.
Treasuries are trading 147 over Bunds at the moment. We've been as low as 138. If that spread continues to widen back out again,
so a car that BYD's car can recharge in less than 5 minutes.
We've been fairly constructive, right? But the easy
less
sort
than
of
5 minutes,
money in the euro
guys.
is probably out of there. But think about all the repatriation. Right, that could come back. You think about this investment in defense, or you think about this investment in growth, and you had that decade-long with negative interest rates.
Yep.
Right, and it's not even from like the Swiss National Bank or the Norges Bank or those.
Money's just gone across the Atlantic.
Exactly.
In waves.
And does that money start coming back to further support, let alone that investment, if there is going to be European growth, which is, we're talking about a fairly big difference in terms of perceptions of European growth from just 3 weeks ago.
Certainly something we're going to be watching very, very closely. Euro-dollar at 109.2 and rising as we speak. Robert Dishner, Senior Portfolio Manager for Multi-Sector Fixed Income, Head of Trading for London over at Neuberger Berman, joining us around the table. I think you asked the key question there, which is that rate differential story and how quickly it shows up in the euro. Because when we've seen these spreads blow out, the euro's been a little slow to catch up for those fundamental reasons. This time might be different.
Yeah, but it's going in the wrong direction at the moment for the euro. So does it get stretched, or is this just a flow story? as Robert says, money just going back in the opposite direction.
Yeah, it might absolutely be, and that's without even factoring in the U.S. and factoring in the Federal Reserve. I'm looking at 430 on the 10-year and marginal strength, I'm going to call it, on the Bloomberg Dollar Index. Coming up, we're going to stick with it, Marcus. We're going to talk about these geopolitics a little bit more. An exclusive interview with Amanda Blanc, the CEO of insurance giant Aviva, as the UK government seeks to cut regulation and urges pension funds to invest more at home. That conversation next. Stick with us. This is Bloomberg.
See that support line, guys? We did not even break it. Look at this. Look at the support line. We did not break it. If you're looking at gold, I'm doing something else in parallel. But if you guys are looking at gold, that was a buy. See? How could we have known? Well, we couldn't. It was a bet. It was a bet. We could not have known. So whoever tells you they knew, it's very difficult, because like in this situation we're kind of struggling with support levels at all-time highs. But like we kind of rely on psychological levels. Like see the 3015 and then 3010 and then 3005. Those are things we kind of rely on.
Carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
But what about the diagnosis? If the diagnosis at the end is worries about growth rates, how do you get from point A to point B? Why do you worry so much about that end goal of better growth?
Because if we can't grow, you're going to have a much more inflated debt to GDP and federal deficit, and that's not good for the economy. Growth is really critical, and I think what's underappreciated is what the inputs are to get to the growth number. And so we talked a little bit about productivity. I hope that we can continue to produce at 2% indefinitely on productivity. I think that would be great. But you got to make sure you have the other levers in place, I think, to buoy that. So if you look back over the last several years, we've had 8 million immigrants come into this country in the last 4 years. And that's helped growth. And by the way, that's deflationary.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. 30 minutes from the start of equity trading. Futures are pointing a little bit higher for Europe, but 30 minutes until we get the cash trade. This is the future picture then. It looks to be detaching a little from the US, picking up on the US of yesterday, of course, but US futures then point a little lower, so we'll see where that takes us later in the session. But for the moment, we focus on some equity gains perhaps ahead. We watch defense stocks very closely. We are also focused on very much what's going on in the bond markets this morning, because we have a German vote taking place. It should pass. This spending bill around infrastructure and defence should pass because the German government has the necessary seats to get it through, in theory, but of course until it's actually delivered, the market will be watching very carefully. With that in mind, we've already seen 40 basis points, of course, added to Bund yields over the past, well, just during the month of March, Valerie was telling us earlier. Yesterday was a little different to that. Maybe some people asking questions about whether the vote goes through today, but today we do see a little bit of movement in bond markets, but not much yield going, just a touch higher across the German curve, in fact.
Yeah, it's fascinating here because we keep talking about the yield move, but the spread story is fascinating in that we haven't actually seen We've seen the denominator move, we've seen the German side move, we haven't seen French, Spanish, Italian debt move by the same margin that I think a lot of people expected. That almost feels like a massive dislocation.
It's also about gilts. There's going to be a big week for gilts as well.
Yeah.
You got the OBR stuff coming out. You've got, obviously, we've spoken to Reeves. Liz has been talking to Reeves.
Yeah.
Huge moment coming up for the Bank of England as well. That's going to potential for movement in gilts this week. Quite significant.
Yeah, next week, of course, the spring statement. So, yeah, making our way toward that, of course. Thinking about what's happening in the UK government says plans to cut regulation will boost investment and create more jobs as it seeks to grow the economy. In an interview with Bloomberg, Chancellor Rachel Reeves defended plans to abolish more business regulators.
Overlapping regulation has held back Britain for too long, and we're determined to turn that around. We've made a commitment to reduce the regulatory burden, the administrative burden, by 25% during the course of this Parliament. That's across all regulators, whether it is in the environment or financial services, or right across the economy. And that is, to me, our ambition to grow the economy, to make working people better off, and to make our country and our economy more competitive.
Now, officials are also putting pressure on pension fund managers to commit 10% of their assets to British equities. That's part of a rebooted Mansion House compact in the summer. Let's bring in Bloomberg's Francine Lacroix now, who can take us into a conversation with the Aviva CEO. Francine, good morning.
Good morning, Anna. Thank you so much. I'm delighted to be joined by Amanda Blanc, of course, the Aviva Chief Executive Officer. Amanda, thank you so much for giving us a little bit of your busy schedule. There's a lot of talk about this Mansion House, Compact 2.0. What are you expecting to see in it? Is 5% asking of investment managers to put of their AUMs in the UK enough?
Well, I mean, no, I don't think it is enough. I mean, it would be great for it to be more, but I think it's a really good starting point. And I think getting that investment from private assets available to retail investors through their pension fund is a really important thing. I mean, we launched our long-term asset fund last month. So, we're really positive about the opportunity to do that. But it also requires a change of mindset, away from focusing purely on the price of delivering the pension to the value created by the pension for savers.
I mean, how much of a difference does it make to you if it's 5 or 10%? What are you hearing, and what are you lobbying the government on?
Well, I think, 5 to 10% is purely mathematical, but to savers it will mean a lot. Because if you think about today, 12.5 million savers in the UK will not have enough money to retire on. And that is, largely because the auto-enroll pension is invested in default funds, which are all focused, as I said, on cost and not on value. More value is created by investment in assets, real assets, private assets, which will make more money over the longer term. But it requires a real change, capability and mindset.
I mean, you had some very good results, actually, in the last quarter. You're giving also buyback to shareholders. Are you comfortable about where the UK is headed right now?
So we are optimistic about the UK. I mean, we're a big employer in the UK. We're a big investor in the UK. Of our £63 billion of assets that we invest for our annuity pension holders, 66% of that is invested in the UK. So it's really important to us. But obviously, we've got our eyes wide open. We recognise that the environment can be, is slightly unstable at the moment. But we see that there are opportunities. We've got a government talking about growth, which is good. We've got a government talking about balancing regulatory objectives, growth and stability. That's also important. So we feel we're in a really great position to be able to capitalise on that.
What would you like to see in the spring statement?
Well, I think if you go back to our results, what we saw there was really strong flows into our wealth platform, really strong growth in general insurance. So things that support that, things that support the market, people to save, maybe out of cash, more into other investments. We would see that there's a real benefit for that, both for us and also for the savers. So we would hope to see something of that. Maybe on the pensions review, what's going to happen there? Are we going to see the next stage of the pension review? At the moment, you have to be 22 before you have to have an auto-enroll pension. It would be good to have the age down to 18. Also to start from zero up rather than at the level that it is now. That will mean that people will be able to retire better. We have 4 million auto-enroll pension savers in the UK, so it's important to us that they can retire well.
The world feels very uncertain because of terrorists, because of trade wars. How does the UK fit in all of this? What does it feel like as a big UK employer?
Well, I actually think the UK feels quite stable, right? You have got a government talking about growth. You've got a new government with a large majority. You've got the opportunity for investment into infrastructure. I think if you could get those big projects, get get things like planning regulation and legislation resolved, get those the skills able to build those projects, and then connect the money to the projects, that feels like a good place to be, particularly for somebody like Aviva that is a big investor in the UK.
But do you worry about volatility, for example, in the bond markets? We saw it in January. Again, some kind of fiscal event could always bring more turmoil.
Look, Francine, we're always looking at that. And if you think about, we're a 327-year-old company. We've seen quite a lot of volatility. So I think that we manage uncertainty. That is really what insurance companies do. Of course, it's not good to have that bond market volatility, but I think we have to feel optimistic about the opportunities that we have ahead of us. Sometimes we can be, we can talk ourselves down, but actually if you look at the UK, the rule of law, regulation, the opportunities that we have, a growth agenda, it feels to me that there is some real positive opportunity here.
Amanda, when you look at Direct Line, is that purchase on track? I mean, it's a massive opportunity, and you've just gotten the blessing from shareholders.
Yeah, so the shareholder vote was last week, 99.8% supportive. That's a really good place. We've now got to get the regulatory approvals. They're all on track. We would like to complete the deal by the middle of the year, and this gives us a great opportunity to be a sort of leader in personal lines, and that's important. It's important to customers because scale gives you the opportunity to pass on that efficiency to pricing to customers, but it's also good for the shareholders. We've got good cost synergies and material capital synergies coming from the deal. So it's a sort of win-win, and it very rarely happens, but this feels like a real win-win opportunity.
And how's the UK doing compared to other? You have footprints in Ireland and Canada. More turmoil expected there, given some of the consumer questions?
Yeah, I mean, certainly, obviously, in Canada, what we're seeing, we saw a lot of weather events last year. So as an insurer, obviously, that was something that we were dealing with. But also in Canada, we have potential tariffs at the moment. That doesn't affect us massively, but obviously we're a car repair business if there are accidents, so it will affect us there. We think that's manageable. But in any part of the world, uncertainty is not a good thing. What businesses want is stability, and so the sooner obviously that can get resolved, the better.
But because the industry is not directly affected by tariffs, does it give you, a little bit of a benefit compared to other sectors?
Well, I think financial services, sometimes you win, sometimes you lose. I mean, I think certainly from the services perspective, financial services, we think we're in a very strong position. The markets that we're in, UK, Ireland, Canada, we're one of the top 3 players in those markets, and they have got, a significant amount of wealth. So if you're an insurer and you're playing in the wealth markets as we do in UK and Ireland, that is definitely a good thing. In Canada, we're the 2nd biggest general insurer, so that also gives us opportunity, and it's a very big insurance market, so opportunity for us to continue to grow.
Is there a danger that actually regulation in Europe stifles innovation compared to the US for financial services, and also the use of AI?
Yeah, I mean, so I think people say that a lot, but I just don't, I don't see that we are stifled in terms of generative AI, for example. If we think about our own business, we've got over 150 different projects that we're looking at, some very meaningful. So we talked about it at our results a couple of weeks ago, using generative AI for our claims agents to be able to summarize claims calls, which takes 10% off the call handling time. That's meaningful to the agent. It's also very meaningful to the customer. So we're seeing real customer benefits from the application of some of that generative AI technology. We haven't been stopped from doing that. We see that there's real positive momentum in using generative AI. And innovation is the same thing. We built a business within Aviva 2 years ago called Aviva Zero. We now have over 1 million policyholders. We weren't stopped from doing that. You can be, even as a big organization, very innovative.
Amanda, thank you so much for your time this morning. That was Amanda Blanc, the Aviva Chief Executive Officer. With that, Critty, I'm going to send it back to you, and we'll have, of course, plenty more on financial services.
Absolutely. Francine Lockweather speaking exclusively, as she said, to Amanda Blanc, the Aviva CEO. Coming up, we're going to go back to our main story here. Of course, we are looking at the debt brake vote later today. Germany's really getting priced in terms of the bond market, the equity market, and certainly the currency market as well. We're going to dive into some of the market technicals here. Chris Rose, ICE Futures Europe President, joins us in just a moment. This is Bloomberg.
Okay. Bum, bum, bum.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670 odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and older and younger. Following the PGA Tour is the oldest aging demographic in sport, 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with. All right? So all of a sudden, we're seeing these data points coming out going, my gosh, we're owning this space.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The main event today, German lawmakers due to vote on a bill to loosen debt constraints and unlock hundreds of billions of euros for defense and infrastructure to the tune of something like 500 billion euros over the next 10 years. Do we get there? The markets are convinced we do. Now, ICE Futures Europe President Chris Rhodes joins us here. You've got an inside take on how the markets are thinking about this. Walk us through just how confident, perhaps, the markets are that today's vote is going to be a done deal.
It's a really good question. I think if we look at the short end of the market, so the European interest rate futures and options and ICE, look at the volatility markets, they are pricing quite a benign outlook for the next 2 to 3 months, even though volatility has come up. Volatility markets are basically suggesting that today's vote will pass, and the markets will be able to deliver, a 2% interest rate for the ECB over the next coming months. So I think overall, if you compare the uncertainty and the sort of the optionality built into ECB policy at the moment, the rates market is not really saying that. It's saying that we've repriced to a higher level of issuance, but on the short end, we're going to deliver 2% rates over the near term.
How much of this, though, is driven by the fundamental news as opposed to perhaps hedging a little bit of the future? Are you seeing an element of that?
I think if you stand back and look at futures markets, they play a role as the sort of hedge market when markets become a little bit more volatile. Yeah. And that's what we've seen in the early part of March. Like all markets, you want the balance between hedge activity, speculative activity, and having market makers in between. So I think overall it's been fairly balanced, the activity. If anything, there's been a bias to call options on your Euribor interest rates. So that would suggest as well markets are preparing more for a sort of a cut cycle or delivering the cut cycle. There's been not a lot of activity on the put side of the equation for higher rates. So again, I think that is consistent with really the base case, even though there's a lot of uncertainty around that base case.
I want to talk about the futures contract that you were here last time talking about in just a moment, but can you just fold commodities in for me? For just a moment?
Guys, are you still here or no?
And I'm wondering, what is it that Europe is reacting to at the moment? Clearly you've got German politics, you've got geopolitics in Ukraine, but all of that kind of in some ways, particularly the latter, folds back into what is happening with gas prices, oil prices being dictated by Donald Trump.
No.
Draw a line between what you're seeing and the connections you're seeing in the commodities business and what you're seeing in the...
I'm sure he's still streaming. I think it's still
Really
streaming.
good points. So ICE are the market leader in energy derivatives.
It is
We
still
have
streaming,
contracts
right?
Such as ICE Brent and ICE TTF. Those markets are trading off their peak. Crude is lower this
Guys,
year.
are we still
TTF
streaming or not?
Is a long way from its peak. So, you know, when I think about markets, I'm thinking about commodities. Will that allow the ECB to deliver the cuts?
Not.
And I think if
Maybe
you
not.
think where we are, you know, the inflationary impulse coming from commodities isn't quite there at the moment.
Is the commodities market leading? I'm looking for signals. What's the tail and what's the dog in this scenario? Which market is kind of leading the other one?
I don't think it's that binary. I think
Okay.
it's about conditions. Will the conditions allow the ECB to deliver the rate cuts priced? I think the commodity markets are not in the way of that pathway at the moment. Of course, things can change very quickly, and I think that's the beauty of markets. New information comes in, markets reprice, and then suddenly there's a different rate path.
So commodities not in the way of that. What about the growth story in Europe? From what you said about the market's assumptions that rate cuts get delivered, it doesn't sound as if the market is assuming that what we get from Germany delivers a huge amount for growth. It might deliver a huge amount for security, but in terms of growth.
Yeah, so if you break down the fiscal package, you've got 400 to 500 of defence spending, and you've got the infrastructure component. I think the infrastructure component is the most interesting bit. I think you covered it really nicely yesterday when you think about fiscal multipliers. The value of the infrastructure spend will be significant over the medium term. But over the short term, we still face trade tariffs, and that's top of mind really for markets. You still face potentially, dwindling growth in both in the EU and in the UK. And so I think in the near term, the base case still holds, although with a bigger boundary of uncertainty around that.
I think it's time now that we ask about our conversation last time around. Last time we saw you, early December, I want to say, you all were in the middle of talking about launching this big EU bond futures contract on the assumption that joint debt may actually be back in vogue. We're seeing a little bit of warmth to that, maybe not that much. Walk us through the uptake of that contract. What are you seeing?
Yeah, so from an initial launch perspective, it's been very successful. We have 1,000 lots of average daily volume. That's around 50 million of notional turning over every day. Participation has grown recently. And what you've seen is the correlation between French and German debt really start to hold in. So the fundamentals are there. I think this market environment, given the historic nature of what's happened in European fixed income, has not been the best conditions for establishing new participation. But that said, it will go down as a successful launch, and we're seeing a lot of pent-up demand in the product, so we're hopeful for the near term.
Chris, thank you very much. ICE Futures Europe President Chris Rhodes joining us to talk about Germany and beyond. Let's stick with that thing. Ben Ram is with us, Bloomberg Markets Live cross-asset strategist. Let's talk about the markets in 3 minutes then, Ben. And let's start with the German story. We've been watching small movements this morning on German bonds across other European debt markets as well. What's at stake, do you think, today in terms of the range of movement we could see in German debt?
Morning, and I think that the markets are kind of very well expecting the vote to pass through without any hiccups. I think we got a bit of a move yesterday in the markets with the Reuters report talking about some constitutional challenges to the vote, but it looks like that path has been cleared now. So the markets are kind of well priced for the outcome. And I think that if you look at the German 10 and 30-year yields, Anna, I think we have seen them move higher by about 50 basis points so far this quarter. That's a huge velocity of a move in such a short span of time. And given that, Europe is going to see more issuance well priced, I think that issuance this year will drop 1.4 trillion euros by all means, and I think that will be a record. And I think that the markets have already repriced for that.
Let's check the chat.
Increase in bond outlay.
Samer,
so
hi.
There is a risk-reward asymmetry that's opened up here on short positions because of that increase in German bond yields. And I think that we still can't forget that Trump is very keen to
trying to set up that stream
so
I can share with you more
levy European Union
content.
Tariffs. So I think with that
here's the
hanging,
studio.
I think that the yields are going to nudge lower over the short term beyond today's vote.
Let me check if I can put it here.
Ben, I'm reading a lot at the moment about the fact that the recent equity sell-off is a healthy correction. And the reason it's a healthy correction is because it's nothing more than a rotation. What do you think?
Well, I think there is a fair case to be made for that, Guy, because if you look at it's a buying opportunity if you lean onto the idea that this is a brief downturn in the economy. If you look at the Fed Atlanta GDP, that's the gauge that I'm watching every day. And if you look at that gauge, that gauge is basically signaling that there may be a contraction in the first quarter. Now the question is, how sustainable is that soft patch in the economy going to be? If it's going to be a long drawn out, prolonged, sustained soft patch, I think that equities will sell off a lot more from here. I think the S&P 500 specifically will go to 4,800. That'll mark a proper bear market for the S&P. But if you think about it as a short downturn, and we don't know yet the complexion of this downturn, if it's a short downturn, then it's a buying opportunity. Bear in mind that the Fed Atlanta GDP turned briefly negative in the first quarter of 2022, and it proved to be nothing more than a blip. So I think that the markets are cottoning onto that idea, which is why you've seen equities come back higher.
Further correction from Ben Rahm. That's the call there, 4,800 on the S&P 500. We thank you so much. Bloomberg Markets Live cross-asset strategist Ben Rahm joining us this morning. Get more up-to-date analysis from him and the team. MLIV Go is the function on your terminal. That is quite the bear call from Ben Rahm. And I have to say, he's not the only one in that camp.
I just pressed on one of you guys.
Yes, exactly. So he was saying that, if the economy, if it really is in a sustained soft patch, then we go
you
into a
can
bear
see
market.
the
But
news.
it doesn't seem to be entirely clear if that's the case yet.
Here's the
That's
chart.
obviously what
Go back to the
people's
chart.
views differ on hugely. As we were talking about with Mark last week, a lot of people, and Robert Tishman was saying this from his trip to Switzerland, really polarised views, a huge range of outcomes out there on stocks and
Okay, you
all
can
kinds
see
of
it
They're going to
this
show up
way.
in the Fed and the minutes and the dot plots and all the other good things we're going to get midweek. What are we looking forward to today? I think German stocks are going to be in focus. Key moment coming up for Germany. I think this BYD story we were talking about a little bit earlier on, is there going to be reaction to that maybe inside European autos? Maybe we get some sort of a kind of reaction, negative reaction potentially to the news of what BYD is delivering. US stocks up quite nicely yesterday. I know we're fading the futures, but it's exactly the same setup as yesterday in terms of the futures picture.
That seems to be the pattern, doesn't it? That you see optimism going into the trade and then ultimately a sell-off. But it brings back to this question of what happened to the defensive bid? Where is the defensive bid right now? Because it felt like when you are uncertain, when things are volatile, the trade is simply you buy U.S. tech or you buy European healthcare or you buy the mega caps. And it's not clear what that defensive trade is right now.
Staples, isn't it? Everybody's been going into the staples and all those sort of stocks over. That's been the rotation that we're seeing.
And meanwhile, away from that cyclicals or not cyclicals conversation, defence does a totally different thing. We'll keep an eye on Iveco, the truck maker today, because it has a defence unit. Corriere della Sera suggesting that BAE Systems could be interested in that defence unit. So we'll see if there's some M&A to talk about in the defence sector.
There's talk that maybe the Spanish want to buy General Dynamics armoured personnel carrier vehicle unit that's in Spain. Maybe some movements, on the M&A front when it comes to the defence space as well. That's the futures picture. The Open is next. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Xiao Rian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need
for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg BHA Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
The sun is up this Tuesday morning. It could be a historic day for Europe. Two real key events taking place. How are markets going to react to both of them? What's happening with the Trump-Putin talks? What's happening with this German vote? This is the setup. Let's start with equity markets. Yesterday, we get a rally into the close for the US markets. Europe went out kind of here, so I'm not sure there's much of a tailwind. Futures have rolled over a little bit, and you kind of see that tail end of the session in the US. But it's kind of the same setup that we saw yesterday. Futures roll off into the morning. And then we get a pick up as the day progresses. But there's a lot of key events coming down the pike towards us. But that's the setup this morning. A little bit of a pickup, maybe for Europe, Chrissy.
The sun is up in London. Is it sunny in Berlin? Well, futures suggest it absolutely is, and this vote is going to go through. You're seeing that getting priced in these markets. The outperformer, clearly the DAX here, higher by 0.7%. Anna, front running, I should say, both the FTSE 100 and the Euro Stoxx 50 futures. This is exactly what ICE Futures President Chris Rose just told us. The markets are saying this is a done deal.
Right, so we'll focus on Germany, focus on that vote taking place, and any early indications we get around that vote. We'll get Oliver Crook up shortly to give us a rundown of how the whole procedure is going to work. In the meantime, this is what the markets are focused on, defence stocks. Of course, this relates to the German story. There's been some reporting suggesting that Germany wants to spend money in Europe, so we'll keep an eye on those defence names. Violence in the Middle East, of course, back on the agenda, so we'll also keep an eye on that sector. Iveco, this is also a defence story. Carrera della Sera in Italy is reporting that there could be interest in the defence unit of this truck-making business. Various bidders are mentioned, so could there be some kind of battle for those assets? And Allianz is selling some assets in India for more than 2.6 billion euros. Guy.
Okay, let's talk about the market open. Here we go. It is time for the opening trade. Let's give you some numbers, give you some colour on what is happening here as well. Let's start off with the index levels and figure out what is happening here. We are expecting a small move to the upside, despite what we're seeing in US futures this morning. Spanish assets are a little bit higher. We're up by 0.2%. London up, let's call it 0.1%. Maybe we're going to need to round up a little bit in just a moment. But this isn't a huge move forward. The next 48 hours, really interesting in terms of what we're going to learn. We've got, obviously, the key events taking place in Europe. We've got the Fed coming up. We've also got what is going to be coming out of NVIDIA to focus on as well. There's some massive moments. Yesterday was a light volume session in the United States, and to a certain extent here in Europe as well. Is that what we see this morning as we wait for clarity on some of these key events? We're a little bit higher. Do we wait? Do we need some certainty? Is that what we're going to get a little bit later on, Chrissy?
Certainly something we're going to be keeping a very, very close eye on. And of course, it feels like all of this momentum is showing up, or at least moving towards not only the German vote later today, but of course the DAX open in about 3 minutes' time. From an early performer standpoint here, we are looking at perhaps some of the heavyweights. So we're talking about where that defensive trade is coming from. It's the heavyweights leading the charge to the upside. I'm looking at Novo Nordisk. I'm looking at SAP. I'm looking at ASML. A lot of guys, Core 6, actually leading this market higher. But it is broad. There are broad gains in this market. I'm looking at about 505 stocks higher, Anna. About 73 lower.
Yes, and worth noting that all sectors are in positive territory today, so it's quite broad-based in that sense. The worst performing media and retail, but even those moving a little higher. Basic resources is the best performing sector. Energy follows. So this is sort of, growth themes come to mind when you see those going higher. Autos and auto parts is another one that is doing pretty well. And I was looking at some of the industrial goods and services to get a sense of where the defence sector is going this morning. I do see Iveco is there. That's the truck maker that has a defence arm. And we talked about possibly some M&A activity being reported in the Italian media, at least.
So do we call that a defence stock? Because if it is, it's the only one that's hitting 52-week high today. Normally my board of 52-week highs is populated by the defence stocks. This morning Iveco is hitting a 52-week high. Elsewhere, it's the banks. There's a whole bunch of banks this morning hitting 52-week highs. They are back. They are moving strongly. You've also got a bunch of insurers doing well. In terms of what we're watching in terms of the volume, though, I think this is going to be really interesting to see how the volume story shakes out. We'll watch that throughout the day. Do we kind of just wait this morning? A little bit of clarity may be required. You've also got NVIDIA coming up. Do you want to fight that battle yet? Do you want to deal with what's happening with the Fed? Maybe not yet. So I think it's going to be interesting to see whether or not there's a little bit of caution this morning ahead of those key events.
Especially when you mentioned this earlier in the defense sector, but I'm seeing some of these other sectors as well. A rotation seems to kind of be afloat here. Is this ultimately another level of the sell the rumor, buy the news? And yes, I am flipping them on purpose simply because of that German Bund move as well. Let's bring in a true expert here about what comes next. Valerie Noel joins the program, head of trading over at Seas Group. Valerie, a pleasure to have you on the program. We thank you so much for joining us this morning. We're waiting, of course, for this big vote out of Germany, something that the markets are pricing in very much as a done deal. What happens next when it comes to not only German equities, but the defense sector broadly?
No, well, I think, as you said, investor bet on an economy boost for Europe. Today it's maybe a wait and see. And as you said, like yesterday in US, the volume was very, very low compared to last week or the daily moving average. So yes, I think it's a wait and see, but you can see the mood. We have seen this rotation from US to Europe since the beginning of the year. So it's just keep going. But I think after today and after the German vote, we will have a more clear picture of what's going to happen in Europe.
Directionally, though, is that we're looking at a plan here that spans, say, 10 years of that 500 billion euro investment that's been promised. Is that something that in the short term brings gains to the DAX or losses?
You know, I'm not sure that's going to complete this productivity gap that you have between US and Europe. As we think we are, still behind the United States. So we have this on one hand, and you have the tariff in US on the other hand. So I think that the market and investors just need more clarity what's going to happen in a few days and weeks. And as I said, I'm not sure that's going to, for the short term, that's going to bridge this productivity gap that we have with the United States or Asia.
Yeah, Valerie, good morning. There's a temptation to think that maybe we get clarity on various fronts, the Fed meeting, for example, this week, and we're hearing a lot more about Ukraine, of course, and Presidents Putin and Trump will be speaking to each other. So a temptation to think we get a lot more clarity about the future path ahead. But I'm thinking we've got April 2nd still to come with the tariffs, and we don't understand wholly how those will be applied. When do you think we get some more clarity about the full picture of the new White House regime and where it goes?
Yeah, I don't know if one day we're going to have one, but anyway, I would say that maybe April 2nd, when you're going to have the reciprocity of the tariff from the Trump administration. I don't know if it's this date, but we're moving in a good direction on everything, geopolitical side. If peace can come, I think everyone would be very happy. We need to know what's going to happen with the tariff and this reciprocity. So that's going to give more or less a direction for almost all the world. And for sure, for the Trump administration, for the moment, I would say tariff, meaning inflation, meaning consumer spending. So all these things is on the roadmap, and I think that's the main focus for them for the moment.
Yes, I mean, we've corrected, we've seen a pullback in the S&P down 10%, so correction territory, Valerie. After April 2nd, are you thinking about whether this is a buying opportunity in US stocks, or do you think it is already?
Well, As you said, for the moment, we're still in correction. We know we hear about bear market last week. We're not yet in a bear market. Bear market is 20%. We just touched 10% last week. And if you look at the historical stat, since World War II, we had 48 time correction, and only 12 of them was on the bear market, or became a bear market. So it's true that we have these uncertainties for the moment. The market normally doesn't really like uncertainties. It didn't really like for the US, as we see at the beginning of the year. I don't know if we have more clarity on Europe, but we've seen at least a direction. That's why probably we've seen this rotation. And I think that the main word for 2025 is diversification. I always come back with this, but I think you need to diversify your portfolio. And that's very important for uncertainties.
Okay, let's talk about diversification. Are different asset classes, the bond market, equities, what's happening with precious metals, gold, telling us different things? Are all these different markets communicating different messages at the moment, or are they roughly communicating the same message?
Yeah, well, for sure, if you look at gold and precious metal, definitely we are in the safe haven part. Gold, we reached 3,000 a few days ago. We had, I think, it's 12 trillion since 1 year, 5 trillion, sorry, in 12 months on the gold price. So definitely you can see that there is a lot of uncertainties, and then people are going on the safe haven asset class. Then for sure, if you look at what's go well since the beginning of the year, you have healthcare, utilities. People get doubt a little bit of tech, but maybe because people had a lot of tech the last few years. So it's just a rotation, and I think if you are more diversified, it's easy to I don't know, not avoid, but at least a little bit less shock if we have a big go down.
Is the recent sell-off just a rotation away from very, very, very expensive tech? Can we just look at it in those simple terms?
I don't think it's only the tech. As we said, there's all these geopolitical things. We also have seen China came back, with DeepSeek, with Baidu last night. That was, it's not only maybe the US exceptionalist. It's been, I don't know if it's been too exceptionalist. I don't think that we should avoid US at all. We actually, we like United States very much at the bank also, but I think it's not, the world is not only United States, and you really need to think about what's happening in Asia, what's happening in the Middle East, what's happening maybe in Europe, as we can see. So yeah, I think people was very, very focused about the tech, and we're going to see maybe today what the NVIDIA CEO is going to say. I think it's going to be a very, very interesting conference later in the day.
Yes, NVIDIA certainly will be interesting. I wonder what you think about crypto at this point, Valerie. We've got Bitcoin at 83,000 or so off those earlier highs then. And of course, many people assume that President Trump will be very pro-crypto. Maybe some of that hasn't lived up to expectation. What do you expect to see in the crypto space?
Well, I don't know if you know, but at the bank we can trade the spot crypto, the trade in custody since 2 years. So we have quite a good view of what's happening, what the client would like to wish to do actually trade. And I have to say we had, since a year, we had 2 big events when the SEC approved the 11 ETF and when Donald Trump has been president. Those weeks been the biggest week for high net worth clients to actually buy crypto. I don't know if they believe it's going to be a real asset class, or they just want, have exposure on this new asset class. But we can definitely see the interest at the bank. We can see people trading every week, not as they trade, other asset, equity, or fixed income, because we're not a digital bank. But we can really see an interest from Main Street coming to the asset class.
Valerie, on that note, we will leave it. Great to have you on the show. Valerie Noel, Head of Trading at the Seas Group. Thank you very much. Let's talk about what we're seeing in the market. At the centre of the market, the core six looks like this. Everything is up, as you can see, across the pitch. We have everything from Novo to Nestle trading higher this morning. Europe feels like it's on the front foot. Feels like a kind of cautious start, though. There's a lot happening over the next few hours for all of these stocks and sectors to price in. Let's talk about some of the other individual sectors, stocks we're watching. Joe's here with the defence story.
So it is a bit of a mixed picture in these defence stocks at the moment, Guy. We have got ThyssenKrupp rising now. Pretty decent move for that. One of the best performers in Europe today. Now, there was a Bloomberg story last night about the potential beneficiaries of the German spending plan, and ThyssenKrupp is one of them. They do have a marine unit that is said to be potentially a winner of an order from Germany. I have been asking traders around that the weakness in BAE System does look like it's just coming off those big highs that we've seen, but that was the worst performer on the FTSE 100. Now, Kinetic continuing that massive drop yesterday, a record 22% drop for the other UK company with big US exposure. A couple of downgrades on that one this morning. Not a big surprise considering the drop we've seen, but a mixed picture as we await the outcome of that vote in Germany, and also the crucial talks between Trump and potentially Russia as well. Another focus also at Gaza as well. Then in terms of Iveco, that was a big mover, as mentioned earlier in the show. Potentially some interest coming into their armoured vehicle business. That is their defence business, more known for their trucks and buses, of course, but potentially going to get some interest, according to Italian press, on that one today. Then here in the UK, the misery continues in the Close Brothers stock today. That one slammed once again in London. This is the company that's really exposed to the motor finance issues in London. We will get that on the screen eventually. There we go. It's down 13%. Also, the owner of the Winterflood stockbroker,
you guys know where I was literally looking at the stock, and they're mentioning it on the news.
Then over in the Telecoms Bolloré in France, that one downgraded their earnings estimates this morning.
It's crazy.
As well. A bit of a drop for that one.
It's just crazy.
And a couple of downgrades in the analyst ratings. Well, firstly, a positive one, Rio Tinto. That is an overweight rating over at the JP Morgan analyst today. So we've got a bit of a boost for Rio in mining, and a downgrade finally for Iberdrola in Spain. The utility company had a big surge. Morgan Stanley thinks that's going to come to an end, so they come down to equal weight. And that one's slipping slightly in Madrid for Iberdrola today.
Joe Easton from our equities team, we thank you so much walking us through some of those early movers in the European session. Let's talk about the U.S. pre-market session as well, because we're already getting a couple of movers here as well, specifically in the mega cap names. I'm going to kick it off with Tesla because, of course, we do have one eye on what the ripple effect of the news out of BYD is. Charging a car in about 5 minutes. What does that do to Tesla? Shares are down about 0.6% in the pre-market. Of course, the big heavy hitter today, later today, is going to be NVIDIA and the GTC conference there. We're going to get an update. Some markets a little bit positive ahead of that, higher by 0.5%. Two others to put on your radar. Broadcom down by about 1.2% this morning, and Alphabet higher by about 0.1% there. What you need to know is that Alphabet has talked about, or is in talks with Wiz, or at least reportedly, for about a $30 billion deal. Broadcom, on the other hand, falling in yesterday's session on a report that Google may work with MediaTek on AI. So some mixed messages coming out of the tech space, Anna.
Okay, coming up on the program, futures pointing to a lower open for the S&P over in the United States. Having been through those early suggestions of where stocks individually will go, we'll discuss Wall Street's underperformance this year and how long it might last. That conversation is next. This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Do you guys know what is one of the main reasons why gold is going up?
To the opening trade, 18 minutes into our European session, and we have European equity markets tentatively moving higher this morning. Stocks Europe 600 up by 0.4%. The Xetra DAX does well, does better than the rest this morning. Now, the UBS EU defence stocks basket is up over 70% year to date, aided by talk of higher security spending by members of the bloc. And of course, we have that important German vote taking place today. We asked Amundi's CIO if he is increasing exposure to defence stocks.
These stocks are priced for not for perfection, but for something very big to happen. The issue is that yes, there will be more spending. Yes, there will be more business. The market is at huge margin. Maybe the market has been a little bit ahead of itself here for some reasons. But currently, valuations are a little bit demanding, maybe too demanding. So I would wait a little bit.
That was Vincent Mortier, the CIO of Amundi. Let's bring into the conversation Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence, visiting us here in Europe. Gina, nice to have you with us. So we have this big day in Germany today with the vote taking place in the Bundestag. And this is around defence. It's also around infrastructure. What is at stake, do you think, in terms of the equity markets, the bond markets, in terms of all of the universe that you survey? What is at stake for people's view of Europe?
Yeah, I think this is definitely part of the story of Europe. It might be being overplayed a little bit as the only story of Europe. If we think back to what really sparked the rally in European equity markets, it started all the way back in November, late November of last year, before we had any resolution of the German fiscal situation, before we had any news of Russia, Ukraine. So this is a longer tale than many people are giving it credit for. It started with a valuation discount that morphed into positive estimate revisions that has become something about fiscal policy. So I do think that the German election was a critical moment, but it was one in a series of moments that has been promoting European equities over rest of world equities. At the same time, you have this ongoing rotation out of quality growth into more low-vol value. That is benefiting certain segments of the world, including Europe, and that's part of the story. The ECB is another part of the story. If the ECB remains somewhat on easing mode while the Fed is sort of more in a stable position, that has a relative benefit to Europe. So it's part of the story, certainly, but it's not the only story, and I think that's important to note in today's context.
We keep talking about the peace dividend in Ukraine and arguably in Israel and Gaza as well. How do you price something like that in? Does it actually make that much of a difference in terms of the fundamentals on a micro level?
It does for the commodity providers. So where it tends to manifest itself, where these issues tend to manifest themselves most profoundly, is in commodity prices, in particular in the energy space. So to the degree that this impacts supply and demand, in particular supply inside the commodity providers, it could impact the fundamentals of the equity market. It may have some impact on general risk tolerance. So to the degree that risk tolerance was somewhat constrained in an environment of these elevated geopolitical risks, some stability there could improve risk tolerance at large, though I think that's a little bit of a stretch considering how much markets ripped over the last 2 years while these issues were at bay.
We'll have to leave it there. Gina, great to see you. Thanks for stopping by to see us. Gina Modern-Adams, Bloomberg Intelligence Chief Equity Strategist. Let's talk about what is happening here in the UK in a little bit more detail. The UK Chancellor, Rachel Reeves, is defending her fiscal rules and her pledges to bring down government borrowing. Reeves spoke to Bloomberg's Lizzie Burden.
Of course, there are costs from any measures on tax, but there are also costs of irresponsibility. And if in the budget last year I hadn't have dealt with the £22 billion black hole that I'd inherited from the Conservatives, if I hadn't have put our public finances on a firm footing, then we wouldn't have been able to...
$3,021 for the gold.
...of weeks ago, and we wouldn't be able to weather the global economic...
I didn't take an order, to be honest.
We made the right decisions in that budget to return stability to the economy, and since the general election, of course, there's been 3 cuts in interest rates, only possible because we've returned stability to the economy.
But do you regret not giving yourself more breathing space against your fiscal rules at the time of the October budget?
Well, in October, we set the fiscal rules for this Parliament that we would balance day-to-day spending with tax receipts, that we would get debt down as a share of GDP. But significantly, we changed the way that we measured investment. So for the first time ever, we count the benefits of investment, not just the costs. And because of that, we were able to invest an additional £100 billion during the course of this Parliament in capital projects, transport, digital, energy, and of course housing. That's pro-business, that's pro-growth, and it's pro-working people.
But I suppose what I'm saying is, isn't it the job of a responsible Chancellor to build an adequate safety cushion into the public finances so that you can weather the sort of changing world that you've been talking about in recent weeks?
Well, we inherited from the previous government not just a big black hole in the public finances, but the lowest ever fiscal headroom. We increased that headroom in the budget last October because it is important that there is headroom against the shocks that we face. But the fiscal rules we've set are the right ones. They're a robust set of fiscal rules, but it is important that we balance day-to-day spending with tax receipts and that we get debt down as a share of GDP. Those are the right fiscal rules for the circumstances that we face. But when we're spending £100 billion a year on servicing government debt, I don't think anyone could seriously argue that we don't need to get a grip of government borrowing and government debt.
UK Chancellor Rachel Reeves speaking to Lizzie Burden. How's that going to go down within the Labour Party? Clearly these cuts are going to cause problems politically within the House of Commons. Interesting to see the pound rising this morning. Is that more to do with the Bank of England than what the Chancellor has to say?
Yes, or is it to do with the weakness in the dollar? I mean, it's not overwhelming today, but the euro is also on the rise, so is it really across from that? But on the domestic front in the UK, we'll hear more about welfare spending. There have been a lot of walking us up a hill in terms of the welfare spending cuts that were coming and then dialing that back in recent days, so we'll see how that falls out domestically within the UK. But the euro also on the rise then, Chrissy, along with the pound, the dollar just on the back foot this morning.
Well, I'm just looking across asset here, and it feels like every American asset right now is selling off. You're looking in the futures picture, you look in the bond market, you look in the dollar, arguably even pushing some of the commodity stories higher. And of course, WTI is underperforming what you're seeing in Brent. So every U.S. asset is on the back foot today.
Does this take us back to the way we started the show? I mean, there's 2 key moments in Europe today. German spending, massive moment for Europe, historic moment. Potential meeting, a meeting taking place between Putin and Trump. What does that do in terms of signalling around what happens in Ukraine? Feels like a historic day, potentially both positive for Europe.
And does Europe have the regulatory backdrop to try and make the most of this situation, or to try and get the money to where it needs to be? I'm joining dots here between the defence story you're referencing and Capital Markets Union or Savings and Investment Union, and we know that the banking sector within Europe is very animated about the need to kind of bring about some of these reforms to try and make investment and saving and what you do with that money more efficient here in Europe.
Yeah, it gets tricky, because then this is where the fiscal multiplier question comes up, right? That the government can unleash the spend or unleash the rules or whatever, but at the end of the day, the ripple effect isn't necessarily the same degree you might expect, for example, in the United States, or the opposite story in Japan or China.
If you change the rules, potentially it is. There's all this dry powder sitting there. Some of these funds aren't allowed to invest in defence. Maybe that's something that also needs to change as well in terms of getting a greater bang for your buck, or euro for your buck, in terms of kind of the way you bang for your euro.
You got it.
But there's all kinds of different ways of looking at this, and Europe's got to reform not on one front, but multiple fronts.
It should be pretty interesting. There's so many options of ways to reform that story. There's the consolidation story, there's the joint debt story.
Yep.
Is Germany the solution to the problems that perhaps started in Germany? There's a lot to discuss there. We're going to continue with the banking conversation and talk about one element of that. But we're going to have an exclusive conversation, a conversation with owner Yank, BBVA CEO, coming up next. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI to decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment
Wow,
is
guys.
86 pages. So we can refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Iliad is coming out right now. We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back. This is the opening trade. It is Tuesday, the 18th of March. It is a big day in Germany, a big vote taking place in the Bundestag today. Will they get that through on investment in infrastructure and defence spending? That's the key question hanging over markets today. But in the meantime, we go higher, in particular in Germany. So up by 1% on the Xetra DAX. The Stock 600 then pretty up by 0.5%. The euro, as we were just discussing in the last part of the programme, a little stronger as well this morning.
A little bit of positivity when we're looking at those European assets today. Does that change and does that stick in the near future? The executive chair of Banco Santander says the Spanish lender may be thinking a little bit differently. Will keep prioritizing the United States and Latin America, perhaps at the expense of Europe. Bottin also saying U.S. President Donald Trump's disruptive policies are good for Europe because leaders have been jolted into action. She spoke to our very own David Weston for Wall Street Week.
The U.S.
has something really important, which is what I call a growth mindset. So whatever government is in place, it has always been more pro-growth, and you can see that in the growth of the last decade, than Europe. So it's early, but I believe that that is